coming up on earnings season again, and with that comes a lot of risk and a lot of opportunity. Bob Iacino, everywhere I read recently, bank analysts have been dropping estimates for Q3 GDP, yet it seems like estimates for earnings expectations are stayed elevated. Make sense of that to me.
Number one, I think when you're looking at earnings, you're not necessarily looking at a direct line to GDP. That's first of all. Second of all, the inflation that everybody's talking about, is it historically bad for stocks? Stagflation is historically bad for stocks, but inflation isn't. And the momentum we've seen in revenue has stayed pretty consistent. Back on October 11th, 21 S&P 500 companies had reported earnings. That was about 4% of the S&P. It's a very small number, but of those 21 companies, 16 of them have reported a positive EPS surprise and 15 have reported a positive revenue surprise, which goes right along with the question you asked.
Scott Bauer, Bob just mentioned that a lot of companies have presented already. In my mind, we break it down basically to Bank Week and Tech Week being the two most important parts of earnings season, with Tech Week actually being significantly more important. So when you break it down into binary events and you see the growth of these CME micro equity products, what benefit and flexibility do those give you going into this event risk?
It is interesting because we look at earnings season as a 3-4 week type of event, but like you said, when you break it down, it is Bank Week and then Tech. So when we look at the micros, they give so much flexibility to a trader or retail investor if they want to just isolate on one of these sectors or on a binary event with the micro E-minis on either the S&P or the NASDAQ or the Dow. So traders can focus on taking more risk, hedging risk. They can take a little bit less exposure, take some off if they want. And the micros are so liquid and so flexible. It's just a great product for retail investors, retail traders to use to look at a binary event like we have coming up here.
Bobby, do you agree with that? Do you agree with what I said, that it's basically binary and basically Tech Week's the big brother and Bank Week is the lesser, and that's really what makes up earnings season, or is it more to it?
I do agree with that. And I think Scott's right in saying that they're separate, even though the stock market is one big market. When you're separating banks and tech, you're doing the right thing. And because of that, the micros themselves become very valuable. For example, a lot of companies will report before the bell, after the bell, and you'll wake up in the morning to a huge gap in individual stocks. We've all seen that, especially in some of the big tech names that can drag, for example, the NASDAQ down if it's big enough. So when you're looking at it from that perspective, the micros allow you to survive these big volatile moves, whether you're hedging or whether you're actually putting risk into the market. You can do smaller positions, and these wider moves don't necessarily damage your account as much as they would if you're just waiting for the individual stocks to open up and you trade those.
So we're coming up on earnings season. Everyone knows inflation is real and it's not as transitory as we were led to believe. Are we going to be hyper focused on margins to see if these companies are able to pass these costs on to consumers?
Everybody should be. We should be, Jim. Absolutely. Because demand is there. That top line number, I believe, across the board is going to be super strong. But when we factor in the shortages, when we factor in these higher costs, that is going to affect the bottom line. That's where that margin issue comes in. And so when we see some of the earnings reports come across the tape and people are hyper focused on them, I think it's going to be so important to understand that bottom line number, which includes, what happened to margin here. In fact, almost 50 S&P 500 companies have already come out and given some warnings about that lower potential margin due to some of these costs.
Yeah, I think that's going to be a huge deal, and I think that's what the focus should be. Earnings season obviously presents opportunity and presents risk. And this time, I think what we're talking about is perhaps the risk is a little greater this time with the added volatility of that. It's not really a surprise to me that traders are flocking to these micro products as another tool to potentially hedge that risk.